Give us a sense whether the pound is on a picnic. It's been to hell and back this week. How long can it perhaps stay higher? And how long will that be contingent on the ability for UK authorities to convince people that they are fiscally responsible?
Sure. Good morning, and thank you for having me. I think Garfield made a few interesting and quite relevant comments earlier in the segment. I think, central banks across the region and across the globe are trying to keep things orderly in markets, and I think we saw a similar attempt from the Bank of England yesterday. But that doesn't really solve the problem for the pound just yet. I mean, if they are looking to temporarily support the gilt market, that is fine, and that may be welcome. But at the end of the day, some of the concerns around the funding needs of the UK economy and the inflationary pressures, they remain in place. So I think if pound has to see some more sustained support, then Bank of England may have to raise rates to offer that support, without which these temporary measures may only go so far.
I see you're bullish on, and this is to turn to Japan, you're bullish on the Japanese currency. And my question is, why would you do that? Why?
No, so I think one thing which we are focusing on is that the currency has already weakened quite a fair bit, to the point where it has clearly become a source of concern for Japanese policymakers. And we already saw them intervening in FX market. We believe that FX intervention alone may not be sufficient if global bond yields and if treasury yields continue to rise. But if that happens, then given that they are clearly concerned about excessive yen weakness now, we see a risk of YCC adjustment to offer a more sustained support for the currency. So we think that we are close to that point where they cannot, or they won't be happy to allow for more yen weakness. If we think about the currency from a more medium to long-term perspective, then as we shift more from inflation concerns to growth concerns, as this coordinated monetary policy tightening weighs on growth, then the yen is likely to regain its safe haven characteristics as back-end yields come under pressure.
We did speak with, I think it was the economic advisor to the U.S., about this sort of the likelihood of any kind of Plaza Accord this time around. And they seem to be ruling that out, at least for now. But my question is, are we getting closer to that sort of coordinated intervention in order to kind of reverse the flows that we've been seeing so far?
So again, what we have heard until now, it doesn't look like, we are close to that coordinated intervention just yet. I think, again, maybe, the interests of different countries are not yet aligned here. U.S. obviously is still battling very high inflation and may not mind a stronger dollar, to offer some support in that battle against inflation. But I think we won't rule it out completely if markets continue to get more disorderly and unhinged. Then at some point maybe policymakers will realize that this kind of a market setup is not really helping their cause for inflation while creating other problems. But it doesn't look like we are there yet.
Well, give us a sense here also, Mayank, of currencies here in this part of the world, excluding Japan. Who are the ones who are likely to feel the heat more than others?
So I think we are focusing on a few dynamics, actually. One thing is that we are seeing significant signs of growth slowdown and slowdown in global trade, and that is likely to weigh on the export-oriented economies in North Asia, some of which are also facing persistent capital outflow pressures. So Taiwan dollar actually sticks out to us on that aspect, where current account is likely to weaken and capital account remains under pressure. So we are bearish on the currency there. Korean won faces some of those challenges as well, but is showing some signs of improvement in the capital account. And also we have seen some measures from the policymakers to support the currency. So we think that given it has already weakened quite a bit, it can start outperforming on a relative basis. So that's those are the dynamics in North Asia. But if we move south in ASEAN and South Asia, we are focusing on the domestic demand, which has picked up strongly and which remains, which is widening trade deficit in part of the region. And again, that is a challenge for the currency. So INR actually sticks out to us, where we are bearish, given the trade deficit dynamics. The central bank has been very aggressive in supporting the currency there, but we think that they may be stepping back as the pace of reserve drawdown may be unsustainable at the current pace.
Mayank, I mean, to your point on the Taiwan dollar, yesterday we heard from policymakers that they were using the threat of intervention, and just now, in fact, crossing the terminal, we're hearing that they will not adopt FX controls, at least during the term there. Currently, what's the target there on dollar Taiwan? How high do you think that gets?
So I think when it comes to Taiwan dollar, I think the central bank has been clear that they are smoothing the market moves, but they are not really drawing a line in the sand, in the sense that the central bank earlier highlighted that the currency is not cheap in their view. So on long-term valuations, the currency has corrected, but it remains slightly overvalued. So that's why we believe that central banks won't like markets to get too volatile, but they're unlikely to draw a line in the sand. As far as the target on dollar Taiwan is concerned, it remains driven by the broad dollar index as well, right? So the broad dollar is moving further than what we anticipated. But if the broad dollar remains strong, then as I was saying, we would like to think of currencies on a trade-weighted index where Taiwan dollar has room for more correction.
And Mike, before you go, I'm just wondering in terms of just where energy markets are going these days. I mean, one day we're talking about supply concerns, now it's the demand picture that deteriorates. How big of a driver is that going to be across FX?
No, I mean, obviously energy prices remain a big driver for the currency market, and especially here in Asia, where a bulk of large parts of Asia are energy importers. So obviously, we saw rising energy prices weighing on trade balances across the region and weighing down on the currencies. Now the question is, as you said, now if growth concerns are weakening energy prices, then does that necessarily benefit Asian currencies? And I think the answer is not so straightforward. If energy prices are coming lower because of growth concerns, then it may not be positive for some of those export-oriented economies, the likes of Korea and Taiwan. The only place in the region where I would say weaker energy prices would be a clear positive is Thailand, where again the current account is driven more from the services side. Tourism numbers are picking up healthily. So as energy prices come lower and tourism numbers are picking up, the current account starts to get more balanced, and and that can allow Thai baht to recover. So we are looking to play for that recovery in Q4.